Now the topic before us is exploring current account equilibrium and imbalance. Three situations may arise in respect of current account. Either the current account may be balanced, surplus or deficit. To understand this concept, let us have a brief overview of current account. In the case of current account, we are forming a table to understand what is current account. Now the transactions in the case of current account are recorded on either debit side or on credit side. This is a current account. Here debit entries are in negative, credit side is taken as positive. Minus means outflow of foreign exchange and credit means inflow of foreign exchange. When we export goods, what happens? Foreign exchange comes. So they are taken on credit side. When we import goods, what happens? Foreign exchange goes out. When we export services such as banking, insurance, transportation, shipping, what happens? Foreign exchange comes in. When we import services, what happens? Foreign exchange goes out. Then there are certain unilateral transfers, one-time transfer. What happens? In the case of unilateral transfers such as aid on humanitarian ground, we may sending to the rest of the world in the form of money, food or medicines. Then foreign exchange goes out. Unilateral transfers paid. On the other hand, if we receive unilateral transfers received, what happens when we receive unilateral transfers such as foreign aid, donations, gifts? Foreign exchange comes into our country. Then we may be receiving income for our investments made abroad in the form of dividend income. So when we receive income, it is to be on credit side. Income for investments abroad. In the same way, foreign investors may be having investments in our country and we have to make payment or the payment is made in respect of rent, dividend. So the payment goes out. Income or payments made to investors for their investments held domestically. So when we have briefly understood what is the meaning of current account, these are the entries which are there in the current account. A value of each of these is recorded. In the case of free transfers, such as free food or free medicines are sent to other countries on humanitarian ground, an estimation of the same is made and recorded in the current account. So here total of the debit and credit is made. That is each whether what is the value of imports of goods, what is the value of import of services, the total of the same is made. Here comes current payments. Here the total comes current receipts. That is, it means inflow, total inflow, or here comes total outflow. We make the total of debit side and credit side. And when in the case of balance current account, it means that debit is equal to credit or outflow is equal to inflow of foreign exchange. Or in other words, we can say that in the case of balanced current account, the total of export of goods and services and other incoming payments is more than the import of goods and services and other payments made. That is, here are we are talking about the value of, that is the value of export and income received is more, income received is equal to, here we are talking about balanced, here the value of exports and income received is equal to the import of goods and services and other payments made. It is not that it is exactly equal, that the debit side should be exactly equal. We understand with this help of an example. It can be, say, 100 is equal to 100, or if say it is 101 and on the other hand credit side is 100, it is also okay. There may be some minor adjustment. If debit side is somewhat more, it will also serve the purpose. Or if say it is less, debit side is less, then it is also regarded as balanced current account. It is not that 1:1 equation has to be there. In the case of balanced current account, there may be some minor negative or positive figure. That is, the credit side may be some minor figure more or some minor figure in negative, positive or negative. Either debit may be somewhat more or credit side may be somewhat more, but overall it reflects that they are equal. So here you will see that this is the complete balanced, but here it is also to be regarded as a balanced position. Then we talk about surplus current account. In the case of surplus current account, it means that here receipts are more as compared to payments, or we can say that inflow of foreign exchange is more than outflow, or we can also say that surplus current account means when the total value of export of goods and services and incoming payments is more as compared to the total value of imports and payments made. For example, if say current receipts are 100 and current payments are 80, so here you can see that credit side is more. Here credit is more than debit, so it is the surplus current account situation. Then comes deficit current account situation. Deficit current account situation comes when debit is more than credit, that is outflow of foreign exchange is more than inflow of foreign exchange, or current payments are more than current receipts, or we can also say that it is a situation in current account when total value of import of goods and services and other payments, outgoing payments is more than the total value of exports and other incoming payments. I hope you have understood this concept easily. That is, it is nothing more. Here only we are to take into account the two sides, whether debit side is equal to credit, debit is more or debit is less. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.